Okay, welcome to Ask the Experts Finance Options for all the attendees that we have here. If you're seeing just yourself in a panel, don't worry. You're not on camera with the panelists. There are several other attendees here with you. So we're going to jump straight into things. If you're here to learn about finance in this Scale Up series, then you are in the right place. To kick us off, a quick land acknowledgement. We acknowledge the lands which constitute the present-day city of Mississauga as being part of the treaty lands and traditional territory of the Mississaugas of the Credit First Nation, the Seneca and Attawandaron and Water Haudenosaunee Confederacy, and the Huron-Wendat First Nation. We recognize these peoples, the Anishinaabe, the Ojibwa, nations within the Haudenosaunee Confederacy, the Huron-Wendat, and all other peoples who inhabited these lands since time immemorial. The city of Mississauga is home to First Nations, Métis, and Inuit peoples. As a municipality, the city of Mississauga is actively working towards reconciliation by continuing to strengthen our relationship with Indigenous communities. We formally recognize the Anishinaabe origins of our name and continue to make Mississauga a safe space for all Indigenous peoples. And the agenda for today, we're going to do a very quick intro about MBEC, which stands for the Mississauga Business Entrepreneur Centre, and an introduction to our Scale Up series, which this is one of 8 of the learning sessions that are part of that series. I'm going to introduce our speakers that you see on screen already. We're going to jump into a panel discussion. We have some questions prepared, and then we're going to get into your questions as attendees for our expert panelists. So Mississauga Business Entrepreneur Centre, which stands for MBEC, we are part of the City of Mississauga Economic Development Office. Please feel free to connect with us if you're looking to start or grow your company and your business. We are your central source for small business information, resources, and guidance. We offer free business information and guidance, webinars and workshops like this one, resources and tools, training and mentorship programs, and entrepreneurship programs as well. And just very shortly, we'll talk about this Scale Up program that we are also offering. So things like business advisory services, the digital Main Street program, Starter Company Plus program, Summer Company program, and other additional training and workshops are all at your disposal here at the Mississauga Business Entrepreneur Centre. Where can you find us? Mississauga.ca/MBEC, and more specifically, where can you find the training, webinars, and workshops? At this URL right here on the slide, you'll see our website that kind of looks like this with the tiles, and you'll see a Scale Up series, which denotes the sessions that are part of this Scale Up series in purple labeled accordingly. So you can go on to check out our upcoming events, webinars, and workshops, or also view the past recordings from our past webinars and workshops. If you have any questions, please feel free to reach out to us. We have an excellent team who are here to help you and answer any questions that you have. Including myself, I wouldn't say excellent, but I'm part of the team, I guess, Entrepreneurship and Innovation Specialist, John Lam here. So feel free to reach out. You can find my contact information there or on our website. Susan Lovelace is our small business consultant, and Laura Dunkley is our digital marketing consultant. So please feel free to reach out to them as well for specific questions that you think they can answer. And of course, social media. Feel free to connect with us via social media, Instagram, Facebook, LinkedIn, Twitter. The handle is at Mississauga EDO, or feel free to email us or call us at the contact information listed there. So now on to our Scale Up series. So this session is one of 8 of the sessions that we have for our Scale Up series. And these are the rest of the session. So last week and the week before, we talked about founder issues and legalities, and we also talked about the leadership evolution of a founder to CEO. This week, we're talking about finance options, right? So you can take a look at the topics. You can go to our training, webinars, and workshops website page to register for the upcoming sessions and to also view the past recordings. So you can see that the ones in January and February are starred. Those are invite only. So this Scale Up series is meant for scaling companies as defined by either 100K to 2 million in revenue. You might be patent pending, or you already have patents, or maybe you've raised pre-seed or seed funding. If you qualify for any of those, then you are eligible for the Meet a Mentor, Check-in and Pitch Prep, and Pitching opportunity in the new year. And especially this program is meant for founders and business owners from underrepresented communities. So if you think you qualify, definitely feel free to reach out to me. Looking forward to hearing from you and offering you the Meet a Mentor, Check-in and Pitch Prep, and pitching opportunities in the new year. All right, so onwards to our scheduled programming. Quick introduction to our panelists, and then we're going to jump into their introductions and then a panel discussion. So from left to right, we have Julia Wood. Julia Wood is a business development manager at Futurepreneur, a nonprofit organization that provides financing, mentoring, and support tools to aspiring business owners aged 18 to 39. With experience in economic development and managing international business accounts, Julia works directly with entrepreneurs to help them secure financing and mentoring to help their businesses grow. So welcome, Julia. Next up, in the middle, we have Julie Ellis. Julie Ellis is the chair of the board at Angel One, a not-for-profit network of high net worth investors. Julie is also a speaker, an author, and leadership coach. She is the founder of Julie Ellis & Co. and a co-founder of award-winning Mabel's Labels, one of Canada's greatest small business success stories. The founding team sold Mabel's Labels to CCL Industries, which is owner of Avery Labels. So lots of experience here from Julie and Julia. So big round of applause for Julie. And last, and definitely not least, Shannon Saunders from BDC. Shannon is an account manager at BDC, where she works with business owners to scale and grow their business through tailored financing solutions and advisory services. Shannon is an experienced, trusted advisor for both individuals and business owners, and passionate about helping people reach their personal and professional goals. So big round of applause for Shannon and Julia and Julie. All right, so before I turn it over to our panelists to introduce themselves, introduce their organizations, and say a couple of words about why this topic of finance options is important, for the attendees, please feel free to submit your questions in the chat at any point in time. We will record them and ask them during the Q&A period after we've gotten through the panel discussion. So without further ado, I will turn it over to Julia to kick us off with an introduction about yourself, your organization, and why you think this topic of finance options is important.
Amazing. Thank you so much, John, for that great introduction. It is a pleasure to be here this morning with all of you amazing aspiring entrepreneurs or already entrepreneurs. And we're hoping to today support you in your next steps in growing your business. As John mentioned, my background is in economic development. So Futurepreneur was a natural fit for me after working at a tech startup and working in the public sector economic development space. It was a really great place to land and support future entrepreneurs who are working through those startup stages or those early scale-up stages. In maybe some coaching, getting their business plan together, figuring out their sales assumptions and forecasted projections. And that's where I really come in and support on that Futurepreneur side. So Futurepreneur is a national not-for-profit organization. We support entrepreneurs coast to coast to coast. I primarily focus on entrepreneurs in GTA West, so Mississauga being a huge driver of that. I support primarily startups or early stage scale-ups. So we're looking at businesses that have been in full-time operations typically for less than 12 months. Full-time operations can mean a lot of different things. It's definitely a gray space for us. So if you've been building your business while maybe working on the side, or if you've been going to school and building your business, there's a lot of ways for us to work around that 12 months of full-time. Another really big consideration, and this often does fit with the scale-up definition and mentality, is we need the business to be past R&D. So if you've been maybe working on R&D and working on testing the market and testing that viability of your product or your service, but maybe you haven't come to launch yet, that's okay. We exclude that time from the 12 months of full-time operations. So we're basically looking at 12 months of full-time revenue generation for our programs. So if that sounds like it would be a good fit for you, I'm always happy to have a conversation. We offer a lot of fantastic business resources. So business planning, cash flow forecasting is our two, bread and butter, meat and potatoes of what we do. We want you to have well-researched business model, and we want you to have well-researched backed financial projections. We offer a lot of really great support to get you there, so you can work one-on-one with a business development manager or our entrepreneur in residence at Futurepreneur. We have amazing free workshops. We have one coming up actually in a couple of weeks called Rock My Business in partnership with RBC, tied to a startup award as well. So there's opportunities to maybe get your hands on some grant money that you don't have to pay back, but also that gives you access to our traditional startup financing and mentorship program. And we'll talk a little bit more about, what comes beyond financing later on, but the mentorship is so crucial and a pillar of what we do at Futurepreneur. We want you to have that sustainable long-term support through our program. So anyone who does take financing from us will also receive 2 full years of one-on-one business mentorship and coaching. I think this conversation is so important today because most entrepreneurs that I'm working with in that early stage scale up are just figuring out their numbers. It might be the biggest hurdle for most entrepreneurs. I can tell you from our workshops and the work that we do, this is definitely an area where people struggle, and that is okay. You're not alone if that's the case. So lean on the resources and the support that's available to help you get there. And thinking about how we can build a strong cash flow projection based on the research and the work that we've done in a business plan is going to help us build really strong cash flow projections and make those really strong assumptions as we're moving into this unknown and we're building and scaling and growing our business.
Amazing. Thank you so much, Julia. I love what you said about the well-researched financial projections, and we're gonna get back to that. So I'm really glad you brought that up. I'm gonna turn it over to Shannon for an introduction about yourself, your organization, and why you think finance options as a topic is important.
Perfect. Thank you. It's a pleasure to be here. So thanks so much for including me in part of this. As John mentioned, Shannon Saunders, I'm an account manager with BDC, so Business Development Bank of Canada. I've been here for almost 5 years working with BDC. I am part of a specialized group within BDC. It's our Ontario Technology Group. So I work with tech entrepreneurs in GTA West, so very similar to Julia. We cover kind of that same territory. So I've been doing that with tech entrepreneurs for the last couple of years, but prior to that, I was in the Southwest Ontario market, and I was supporting entrepreneurs basically in all other industries outside of tech. And really, I've been a career banker. So previous to BDC, I was with RBC for about 9 years in many different personal banking roles, all the way through to commercial banking. BDC, the reason I more or less kind of shifted to BDC was just the ability to kind of work with all entrepreneurs, being able to just support them much earlier on than you kind of could at the bank. So, we do play a very complementary role to the chartered banks, and we really try to kind of fill gaps in the marketplace. So, BDC as a whole, we really are the only bank that is exclusively dedicated to entrepreneurs. We support, I think, about 62,000 entrepreneurs all across the country. There's about 2,400 of us, and we have about 123 business centers, again, all across Canada. So there's a lot of us out there. There's a lot of support, a lot of resources. BDC kind of has three different arms to the bank. So we've got financing, which is what I'm a part of. So it's just your typical kind of term lending. Then we have our advisory services. So again, a lot of mentorship, coaching for all aspects of your business, whether you're looking to grow revenue, you need help with financial management, operational efficiency, human resources. You sort of name a challenge you have, and we could try to find a way to help you with that. And then we also have our BDC capital arm, which would be venture capital or, growth and transition capital if you're looking at a merger or acquisition, and that sort of thing. So yeah, I am excited to be here today. I think this topic is something I pretty much live and breathe daily. I'm having conversations with entrepreneurs about, funding and their journey and where they're at. And it's never too early to have a conversation because it may not be something that we could help you with today, but at least we could help you determine, maybe what milestones you might need to reach before we can support you, and then how we can. So, we're there to support companies very, very early and hope to kind of grow with them. And, knowledge is power at the end of the day, right? If you don't know what you don't know, right? So it's important for us to talk about different options that are available to you, the advantages, the disadvantages to each, just so that that you have that support when you do require it. So yeah, very relevant topic and something I'm super passionate about. So yeah, look forward to the discussion.
Amazing. Thank you, Shannon. And thank you for being here. Julie, over to you.
So, as John said, in founding my own business and growing that to about 40 employees before we sold it, we were able to self-finance that business because of the business model we had. So we were incredibly fortunate in that regard. But it was something we always debated was, could we grow the business bigger and faster if we did take money? And so I think that's, and there are some businesses and some segments where you're going to have to take money at some point in order to grow. And so that's sort of fitting together of the pieces of, do you borrow it? Do you take an equity investor? And what are the different ways and what does it mean to do those different things? At Angel One, we're one of the founding members of Equation Angels, which brought us together to have nearly 200 check writing investors. And we streamlined our process for investment companies coming in for investment so that we had a coordinated deal flow process. And that has allowed us to fill rounds and invest more quickly in the entrepreneurs that come before us. And so I think, in order to have a good valuation for the company, typically you're going to need to be earning revenue already, not be pre-revenue. Of course, in some segments, there's always going to be exceptions to that. But you have to weigh out what are the benefits of giving away a part of equity. I think there's a natural, well, I don't want to give away any of my company, but how can that help you move faster and grow bigger than you might have without? And that you keep a big chunk of a much bigger company. You have to be strategic about how much you give away and if you'll need more rounds of financing and what that might mean to you in the long term. But I think that it's a really important thing. And one of the real benefits of doing an angel round is that they want to roll up the sleeves. We want to roll up our sleeves. We want to put our hands into companies and we want to help entrepreneurs grow. And if you can find people, which I think is very feasible, who have expertise in the areas that you're lacking or that you're looking for, who have just plain done it before, that can be of a huge advantage to you in trying to scale up your business quickly.
Yeah, absolutely. And that point came up in our previous webinar last week about that network, right, of that advice. So yeah, very great point there. So I guess to start, um, if we take a look at the journey of a company, from an entrepreneur having an idea to scaling and expanding globally, when would it be the best time for them to come to you and to get finance from you? I think, Shannon, you mentioned that it's never too early to have this conversation to help you, prepare. But when would it be the best time to access that financing from each of you?
Sure, I can go first here. In terms of us, I guess going back to kind of what Julia had said, specifically on the tech side, right? Like there's always an element of R&D, but sometimes it is too early, right? So not to say we won't look at a company that is pre-revenue, but we do want that technology risk to sort of be gone, right? So we want you to sort of have that minimum viable product where you're ready to sort of commercialize. And that's sort of when we can start to help you when you're at that commercialization stage, or maybe you've just landed your first contract, or you've successfully, completed some pilots and stuff like that. And, there's some momentum and your sales pipeline's building, that's sort of when we would want to come in. And then ultimately, outside of tech, if you're a business that's starting up, I mean, we will help obviously you with a startup. Like we can do financing for a startup. So there is a little bit, it depends on what industry you're in. If you have a product, a service, what it is that you're doing. But yeah, we can help pretty early stage.
Yeah, and I can jump in there from the futurepreneur perspective. It's quite similar. So we do want you to have your initial research and development completed, really. So a working beta or a prototype, if you're looking at a physical product, is key for us. So commercialization, very important. We can look at pre-revenue. That's where maybe we're a little bit different, because we can support earlier stage. What we would want to see there is that at least there's some usability, and that you've probably tested the product or tested the market enough to have revenue generation. Usually within 3 months is, I would say, our maximum time out. Because it's debt financing, we want you to have the means to bring in revenue and pay back the loan. That is so key for us. So we do want that revenue generation to be there or not too far off in the future for us. If you're looking at tech, I would say if it's an app, we want you to be in the app store, right? Like we want to be able to go in and actually download it and play around with it. It doesn't have to be a live platform if you're going that route, but giving us at least access to say usability works and we can click through. So it kind of can depend case by case, especially in tech. We would say work with our team to help you get there, but that revenue generation would be so key for us.
Awesome. And Julie, before I kick it off to you about this question, what I'm noticing from both your answers, Julie and Shannon, is that you have the sweet spot, and you're both saying, and we're willing to work with you to get you there. I think that's the beauty of working with Futurepreneur and BDC. And I'm going to change the question up a little bit for you, Julie, just to keep you on your toes. So when would a company be best suited to work with Angel One? And can you provide an example of, say, Mabel's Labels and that self-financing journey, and also if you have an example of other entrepreneurs who have come to Angel One for investing, when have you seen that like beautiful match be made, or when has it been too early or too late? Can you provide an additional example through your experience?
So I think I'm of the opinion that it's never too early to make relationships. So whether you're ready to enter into a financing program or a relationship with investors, it's never too early to start reaching out to people, because the companies that we would typically invest in are often warm companies. So somebody within our group has met the founder, and for some reason they've developed a relationship, and when that company is ready to apply for funding, they have a warm handoff into our network. So and I don't know what the stats are on sort of that between cold landing in our inbox and warm intros, but I can tell you we get many less warm intros and do many more investments on that side. So I think it's never too soon to make those relationships. And I mean, for us at Mabel's Labels, we were really fortunate because we sold the product on the internet. We made it the next day with the supplies our supplier delivered that morning, and we paid them 60 days later. Like and that wasn't really part of our thought process when we built that business. Now, later in our trajectory, after we'd been in business about 8 years, we founded a second company, Mabel's Labels Retail Inc., and sold to Target and Walmart. And that's a very different P&L. You need capital because you have 6 to 8 months where you're buying product, putting it in a warehouse, bringing it across oceans and distributing it to major retailers who then pay you 60 days later. So that business model was different, and we were in a fortunate position where we could self-finance that. As far as like timing for companies and when it's been right and that sort of thing, I would tell you that a lot of the time, angels do due diligence. That feels hard. It's a lot of work for entrepreneurs to raise money. And it's kind of a process that's never over, because one of the things I think you have to be careful of is asking for enough money. And so then you are in a cycle. And I think that the entrepreneurs that I've invested in, a lot of them are because I believe in that entrepreneur. And yes, we jump through hoops of due diligence, but with an early stage company, the truth is you can only find out so much. And, I'm sitting at about a 50-50 ratio on those who I invested in who have survived and those who have not. And so, which is actually me beating the odds currently. So it's one of those things where you, like for me, I really have to believe in the entrepreneur. And I think that's pretty common with angels, because I like to see their track record. I like to see that they've invested themselves in getting the business. I think this speaks a little bit to like what even Julia and Shannon were talking about, where like you have to have revenue. If you have an app in the App Store, it has to be there. That means you have to put money into your business. And so money, time, effort, all of those things, getting financing from a group of angels isn't an alternative to doing those fundamental steps to get your business forward.
Yeah, that's amazing. So, Julie, you talk about this concept of you're funding the entrepreneur at that angel stage, and you really have to believe in the entrepreneur. So I'm wondering, can you tell us a little bit more about what's going on in your mind? Like, what are the other things that you're looking for when you're evaluating an application, a pitch deck, or a presentation? And do these buckets, whether it's entrepreneur, projections, whatever it might be, do these buckets change depending on the industry of that the company is in?
They do, because when you get to revenue, how much time it takes, what you need to invest to get to revenue will be different across industry segments for sure. But like fundamentally, you need to see that great planning, cash flow, and financial picture that's been developed with those assumptions. Like that's a baseline. I think no matter what kind of financing you're going to look for, you have to do that, and you have to do it well. You have to know what you want to do with the money. But you make the best assumptions you can, and nobody's ever hit to the dollar the forecast. Like it will never happen. So you have to also then be in a continual, like, what's the process you have for, check, adjust, and go forward, because you're either going to overshoot it or undershoot it, and you have to figure out what's going to happen. And I think that's why, like from that angel perspective, don't ask for too little, because that's also a flag of, okay, we don't want our entrepreneurs to end up in an endless fundraising cycle. So we need to see, 18 months of runway off the raise, because otherwise it's wildly distracting to raise money. Your eyes are not on your business when you're raising money, they're on raising the money. And so you need to get a period of time where you go back and your eyes are focused on that business, and you start to build it, grow it, scale it up, before you have to come up for air and come back out for more money. So building a round that's big enough and being realistic about what it's going to take is really important, so that, when you go back for the next round, you've been able to achieve the promises you laid out on the table, and you can go back to that first round of investors for more money.
So that's a very interesting perspective, because in investment we're talking about rounds, whereas compared to Futurepreneur and BDC, it might not be a similar case. And Julia, I saw you kind of smirking there a little bit when Julie mentioned that financial projections are always off, and you're never going to hit it on the dollar. What are your thoughts on that?
That is so accurate. I think the hardest part for an entrepreneur when they're maybe building out sales assumptions for the first time is that unknown. So a big part of my job is trying to get you as the entrepreneur to be really comfortable with that unknown and comfortable with making assumptions, but assumptions that are based on the research and the work that you've already put in, right? So when you come to us, if you don't have a business plan, like that's step one, right? We're going to work on a business plan. We're going to make sure that that is well researched and that we're building a business plan that really goes over the industry, your competitors, understanding your target audience and your customer and the trends around their behavior, right? Those are going to build the assumptions for us as we look at our cash flow projections. So my biggest piece of advice is, probably get comfortable in that space of the unknown, because your forecasts are never going to be accurate. And that's okay, because they're forecasts, but the work that we need to put in to building as accurate as possible forecasts is so crucial. The other thing that I always stress is, realistic and conservative. That's where I want you to go. I'd rather you, undershoot, as Julie was saying, and have a year that's better than what you were expecting in your initial forecasts and projections, than not having enough funds. And the other thing that Julie said that really resonated with me and the work that we do at Futurepreneur is tell me how you're going to use the money. I think that is something else that is often missed. We want to see like a really clear picture painted for us as to how you're going to use the funds. And sometimes I have entrepreneurs come and say, I just need working capital, or I need the money to help me stay cash flow positive. And for me, I would question that. I'd want to get a little bit deeper. I'd want you to break that down with me, because that, again, is going to help us build those accurate projections and get us to a place where we're feeling really comfortable. And I think the amount of financing is so key there too. So we're never going to be in a place at Futurepreneur where we feel like we're undercapitalizing an entrepreneur. We want you to take enough funds to have a financially sustainable business. We want to get you through to the 2-year mark, really. That's our job, because we're more early stage often than BDC or any angel investment. So our job is to try to get you the capital that you need to get to a place where you're more established and set up, where someone else is going to look at your file. So we want to make sure you have the resources and the funding to get there.
Amazing, very, very well, very good points made there. Shannon, have Julia and Julie missed anything, from your end, and also from
No,
the
they've
tech side
definitely
of
hit the nail
things?
on the head. Yeah, they've hit the nail on the head. I mean, it's the same thing. We're constantly, I think that is the biggest challenge for entrepreneurs is those financial projections, right? And we do ask a lot of questions, and we will sensitize those, even ourselves, right? Because as the two of them have already alluded to, you don't want to be underfunded. And that's our biggest thing too, right? We want to know if you need 500 and you only have 250, well, and we can only do, let's say 250, well, now our debt is really just a burden because it's not getting you to where you need to go. So, you need to be fully funded. We need to see what that runway is. How realistic is it that if you're planning, in 18 months to raise equity, how realistic is that? Right? Have you been talking to investors? If you do have some early investors, are they willing to put in more, right? There's a lot of questions, use of funds, biggest thing too. It's always one of our first questions. Are you able to kind of break that down and articulate, your plan and for those funds, right? And is it truly sort of enough? So again, being able to leverage, your network, people like Futurepreneur, myself, BDC, we can help with a lot of those things, right? So like Julie alluded to earlier too, right? It's never too early to start building relationships. That's why I would say I would never not have a conversation with an entrepreneur. It doesn't matter what stage you're at. I can kind of, at least I can connect you to other people within my network or within the ecosystem, right? I think there's always value and there's always a takeaway out of a conversation. So
Very well said. So I want to stay on this topic of these financial projections because for a little bit at least, I've talked to entrepreneurs who are at a very early stage, and they say, I need, I'm making this number up, $100,000 for Facebook ads, or something that might be a bit unrealistic when we consider the amount of research that has gone into that type of decision. So when it comes to, however, scale up companies who are a bit more established, we might see a trend in where the funds are going towards, right? Places like R&D. They might have a prototype, they might have a MVP, but they need to kind of develop things further. Depending on their growing customer base, they have to refine the product and scale it. So R&D seems to be a big one. Marketing, sales, hiring marketing people, hiring sales people, not just dumping it in Facebook ads, for example, but hiring to really get those repeatable processes in place and to really execute, right? R&D, marketing, and sales, those seem to be, some pretty big buckets. So when a company comes to you for, and gives you those financial projections, um, what are some green flags, in terms of their decisions on spending, and what are some perhaps red flags that might make you consider, hey, what's the research behind this? I see Julie, you've unmuted, so let's start with you, Julie.
I would say, commonly, yeah, you'll see like building the team, marketing, R&D, those sorts of pieces. And then it's like, you want to see that the entrepreneur is going to do their own research and talk to the advisors that they've built, So, like one of the things commonly investors want to see is, okay, how are you filling the CFO role? So chances are, as a startup, you don't need a full-time CFO, but you're going to need to give your investors some comfort that you have that expertise and somebody with lots of experience. So have you looked into finding a co-founder who's a CFO, finding a fractional CFO, and what are, there's different paths that you can go down to that. And so what have you explored, and why have you picked a fractional CFO over finding a co-founder CFO, for example? So we want to see that, when we ask a question that the entrepreneur can come back and sort of support the decision that they're making. And then, it might be pushed back a little bit of, well, we think it would be better if you actually, found a co-founder. There's just, so, every question can be answered in different ways. So it's really wanting to see that the entrepreneur has the thought process and has, really kind of explored different ways that could be solved, and then can, stand up for the why of what they're doing.
Julia?
Yeah, thanks. I think for me, the biggest ones for us are R&D and sales and marketing typically, and sometimes it might be bringing on, some support or other HR resources, and that's great. We can typically support in funding that. R&D, it can be, a gray area for us. So the clear thing again is like having that MVP and working beta. Like we don't want to fund R&D that's going to help you complete something. So keep in mind like your timing, but you did touch on that, John. What I would say in terms of requests, when I have an application come in and I look at a cash flow forecast and I just see a line in the startup costs or in our, in how you're breaking down your funds, R&D, or just a line for sales and marketing, or a line, it is some common Facebook ads, that's where I'd really raise that red flag. I would then go to the business plan, and that's our second document of requirement for the application. And I'd want to ensure that what I'm reading in the business plan is giving me insights to what R&D means there, what sales and marketing means there. So I'd want really detailed implementation plans, essentially. And I typically refer to the business plan when I'm looking there. So my biggest piece of advice to entrepreneurs is when they're not sure how to show things in a cash flow is it relating back to your business plan? Right, your numbers and your cash flow should be backing up the work that you've written in the business plan for us. So when you say sales and marketing, if I go to your marketing section of your business plan, is there a detailed implementation plan there that's actually listing out by activity, how often you're running it, what are the resources going in, being your time, staff time, financial resources, and what's your expected return on investment for that activity, right? So I'm not just looking for a marketing plan that says, yeah, I'm going to do social media marketing. I want to see very detailed activities with breakdowns of, actual implementation. This is how I'm going to carry out that plan and that activity, and this is my expected return on investment. And again, when we're talking about really building strong sales assumptions, we should be linking those marketing activities to our sales projections as well. So if I'm seeing sales and marketing in the cash flow and that's a big part of your spend, then I'm reverting back to your business plan and ensuring, check, check, check. I have a detailed implementation plan. And then I'm looking at that expected return on investment. One, is it realistic? And then is that linked to the sales assumption? So I'm going back and forth between your business plan and cash flow the entire time I'm reviewing your application, and I'm ensuring that they line up and they make sense.
Yeah, that's so critical. The assumptions, numbers are just numbers, right? It's how you describe it and the implementation behind it. So that explanation is so crucial. Shannon, how about you and from BDC side?
Yeah, so same thing. I mean, the return on investment is key, right? I mean, sales and marketing, those ultimately, especially in tech, right? That is one of your biggest spends. So we want to know too, we would look at, right? That's an area that you would likely scale back if you didn't have cash, right? So then we would want to see how that's maybe impacting your top line growth, right? So again, we're going to look at those numbers in great detail. From an R&D side of things, I mean, with tech, there's always going to be a spend, right? Because there's always going to be ongoing maintenance, or you're adding additional features and stuff like that. So I guess we would just really want to know what that value add will be of the spend, right? If you're going from version 1 of your product to version 2, well, what happened with version 1, right? Can that still, like, there is some risk, there. So it's being able to just understand what that spend is going to be. But it also opens it up for us. I know when I see those line items, are they working with other government agencies like NRC IRAP to get some funding, right? There's a lot of companies that I meet that aren't even going in for the SR&ED credits, right? So there's always opportunity when we're looking at these things too, to make introductions to other partners so that they could get project funding that's non-repayable to sort of help with those expenses and things like that as they continue to do R&D.
Yeah, so there's that additional element of where else are they getting funding? Who else do they know? Which I anticipate is probably important from an angel investing side. For example, Julie, if you see that a company has worked with another angel investor or somebody that right, that kind of contributes to that warm lead that you spoke about before. Those feelings of comfort of working with this company, right? Oh, you're on mute.
Oh, yeah, and there we go. People you might refer to us, right, from MBEC, people who might come through a regional innovation center, like all of those warm leads as well, the people that we kind of cultivate relationships with in order to find our deal flow as well. Because certainly, like, I meet lots of companies, but I don't meet all of the companies that are out there for sure. So it is that whole network piece of, building a network on both sides.
Yeah, absolutely.
Mm.
So this term return on investment has been brought up a couple of times, and um, my understanding is when you're looking at the financial projections or the business plan, and you're talking about return on investment, you're talking about the if the entrepreneur were to spend the money in this particular way, it would return the investment for their business in this way. It would get them this many customers. It would get them this many, for example, Facebook ads. It would get them this many likes and, drive traffic to the website, etc. But I want to stay on this, other side of return on investment because I've worked with entrepreneurs who are hesitant to uh, get loans or get grants or get investment because perhaps they might be thinking that this need for return on investment for the funding body would drive them in a direction, would drive their business in a direction that they don't want to go. So there's that kind of hesitance. Can you describe that a little bit in terms of your point of view? What would you have to say about that? Yeah, go
Sorry.
for it, Julie.
Yes, it's a real concern. When that is one of the difficulties about bringing other people to the table. And so it comes with expectations. So whether that's, you get financing and then you have things you need to report on it, whether it's, all different places. And I guess nobody, even at Mabel's Labels, we needed experts around us. We hired lots of different advisors for things that we did because we didn't know what we were doing a lot of the time. We were always going into uncharted waters. And so we always needed to find experts who could help us get through those times. And I think that yes, it was different because we could choose whether we wanted to listen to them or not. But if you're going to bring smart people around you and, with investors, there is an exchange. Part of that is around making sure you put good legal agreements in place at the beginning when you all like each other, because if you decide you don't like each other, that's what you're going to lean on in the bad times, is that you put a good legal agreement together. And so you have to think about things. Nobody ever wants to think it will go wrong. I'm sure for me, I don't have any specific examples myself, but I know things go wrong. And so you have to be careful in the good times and not ignore your proper amount of due diligence and responsibility on the legal side, because that's what's going to carry you through the difficult times if you hit them.
Very good advice there. Shannon, I see you've unmuted.
Yeah, I was just gonna say, I think it also just it comes down to, like, it's smart money, right? Like maybe you need a mix of, taking on some non-dilutive financing where you're not giving up any, of your company. You're not having to do much reporting or listening to others, but then there's value in that on the flip side, right? Someone who could be a strategic advisor to you, or they have that background, that expertise, they've built a business similar, so they bring a lot of value to the table. So it's like that trade-off, right? With finance or with a term loan, right, you're going to have interest costs, right? When you are looking to raise equity, you're giving up some of that ownership, right? But I think it's finding that right balance and having the right people and partners sort of around you. And that's where it comes down to, knowledge is power. You need to know what's out there and available to you so that you can make those smart decisions.
I'll just echo Shannon. I think you really hit the nail on the head. And I was going to say it's a little bit maybe different from our perspective in the debt financing space. And also I would say we're more early stage as well. So with that in mind, things do look a little bit different for us. We don't actually require any reporting for our entrepreneurs who go through our program. So that is a burden that you don't have to worry about, which is really nice. But I'll give a little plug for the Futurepreneur Mentorship Program. So if you take some financing from us and you're really just looking to have someone in your corner, someone to lean on, someone to go to with your questions, help you kind of bounce ideas off of, that is available to you through our financing program. It might be, again, geared at people who are a little bit more early stage, but we do try to pair you with someone who has industry experience, who has the skill sets that you're looking to lean on. We also look at your local market too. So if you're selling to appeal target audience, then you want someone who actually understands and knows the GTA. So we do try to look at your local market too. And so, with that in mind, you can actually typically access a lot of really great resources and advisory support when you're maybe a little bit earlier or not quite ready to bring on, some equity-based partners or investment in that space.
I love what you said there, Julia. It's always a give and take, right? And if you're taking any funding, inevitably no money is free, right? Even if it's a grant from the government, right? It's not free money. There are things that you have to do, like reporting and um, other people that you might have to answer to that you haven't really thought about. So what are some of those strings attached, with say angel investment or investment from or loans from BDC, investment from BDC, and also loans from Futurepreneur? What are those strings attached, and why do the benefits outweigh those strings that are attached to the money?
Sure, I can go here. I mean, for us, we are a lender, and I mean, we do have reporting obligations, and we will need to see, financial statements and things like that, your business plan projections, all of that. There's definitely work that goes into it, and there's still due diligence that goes into it. But in terms of on a go forward basis, I mean, we're looking to be part of your journey, and it's not just about doing a transaction with you, right? Like, we really truly are looking to sort of grow with you and your business and continue to help you with whether it's additional financing for other projects, right? Or as you continue to build and scale, and maybe you want to look at new markets and things like that. Like, we're there on the advisory side to support you and connect you, and then obviously on the financing side. So again, it really is a partnership. So you are getting that, and you're getting access to advice and greater networks and reach and things like that. I think too, when you have a lender come in early, sometimes that there's credibility there, right? So if you're going to raise money and they see that BDC has invested money or helped this company out, right? That holds some weight as well. So someone has also believed in you, similar to us when we see that there's an angel that's invested, or they've been working with Futurepreneur, or they're working with NRC IRAP, right? Like, we know that there's been due diligence done for those other parties too. So that gives us some additional comfort as well. So yes, there is that trade-off, or the strings that are attached is certainly, interest costs. And yes, you're going to need to provide us with your financial statements, and there might be a personal guarantee that's attached to that loan when you're an earlier stage company, right? On the personal guarantee side, we're not looking to take your personal assets specifically as collateral, but it is still a promissory note, right? You are still liable personally for that debt obligation, right? So yeah, I think the benefits usually far outweigh any of the costs associated, right? If you're thinking of interest and stuff like that. The personal side, most entrepreneurs have invested so much of their personal life savings, right? Their business is essentially kind of their life. So
Yeah, I can jump in there too. Very similar for us. All of our programs are personally guaranteed. So that is definitely something to think about. And maybe entrepreneurs don't realize that when they first come through our door. But when you are so early stage and you are so, fresh as a startup, that is what we're going to look at to assess eligibility. And that is what we're going to guarantee the loan on. So that's something to keep in mind. We will do a personal credit check to determine your eligibility for our financial program. So knowing your own personal financial situation, really, really important when you're going to be coming to us for maybe some debt financing. Obviously, there is that interest expense for you taking on any debt financing through a loan with us. But I would also agree with Shannon, the benefits outweigh, I would say, the expense here. And so you can access some startup funding or even that early stage scale up funding from us. Not only are you going to get that financial support, you're going to have access to the mentorship program. So that's 2 full years of one-on-one business mentorship and coaching, no additional cost to you. It's just to have someone to kind of lean on and make sure that you are going to have that continued support through the program. And we want to be a part of your journey too. I think that's the biggest thing for us. We want to see you succeed. We have a really strong network and community that stays in touch. And I stay in touch with a lot of the entrepreneurs that I work with. If I'm going to be working with you, maybe a few sessions on your business plan and your cash flow projections, there's often a relationship that's built there. And again, that value add of not just working with me or someone else at Futurepreneur, but the network that comes with the entrepreneurial ecosystem. So being able to connect you to all of our partners that we work with in various capacities. We work with MBEC and we work with BDC, and we do know the angel networks, and we are familiar with the entrepreneurial stakeholders. So usually if you're coming through our door, and even if we're not the right fit for you, there's going to be a good fit for you somewhere, and we try to find that for you. So I would say, again, thinking about the value adds that you're going to get from participating in the greater community really do outweigh, what we would be taking as an interest-based loan.
Mm-hmm. And again, I'm gonna caveat this question for you, Julie. The additional benefit, this network, this additional set of intangible benefits, I think perhaps is really important for angel investment. Of course, it's important for Futurepreneur and BDC as well. I think where I hear it emphasized a lot of the benefits of angel investment is that type of network. So can you talk to this particular question in the perspective of also leading to future rounds of funding, whether it's an additional round of angel or leading to VC funding as well?
Yeah. So I think almost all the companies I've invested in, I have put money in another round. So just that's something, and I would put more money into somebody I already invested in before I'd invest in a new company, because I'd rather keep betting on the same one and make sure that they get what they need to get to the next level. So I think as far as, yes, you've got all this reporting and you've got all of these hoops you're going to have to kind of jump through, but you're sharing your risk with other people as well, which is why they have some demands on you, because they are taking part of your risk. And so if you start to look at it that way, I've seen some people with incredible experience, incredible connections, ways of doing things, and just the ability to help that entrepreneur really move quickly and to go up the scale ladder. But yeah, and it does mean, you have to think about ways you're going to exit and things that are going to happen and those sorts of things. Nobody gets to a Series A without making relationships and starting to talk to people. And, sometimes when you get up into the venture cap world, the angels get taken out. It kind of depends on, what the capitalization table looks like, what the venture cap firm wants. Those kinds of things, but that doesn't typically, they don't show up at your door one day. That's not the real story. The real story is the people who made the relationships and send the venture cap an email every 6 months saying, hey, I've got an update, here's how things are going. Those are the people who, you know, ultimately get financing. And so, you know, it's not like the unicorn runs through the room and comes to your front door and offers you $3 million, right? So you have to build relationships for that, and you have to, you know, take that long-term view. Like, I'm doing an angel round, I'm going to do a secondary angel round, then I think I'm going to need my Series A in 3 years. And, you know, then you get into reality, and maybe your revenue is bigger than you thought it was, so you didn't need that, or you secure a great partner, or you decide, you know, you can do some debt financing. Like, it's kind of a little bit of a, you know, you start looking at all the options as time goes, but I still come back to that networking piece, and how you build that for, you know, looking at that long-term view. Like, what's the network I'm going to need in 3 years or 5 years when I get to that place, and how do I get to the people I need to meet? Who do I need to meet who can make me an introduction, or how do I meet that person? Or even just, you know, trying to figure out who do you need to meet? How do you ask that of the people you know, and, you know, start to really learn about, you know, does like I've come across a few people in educational technology lately, and, you know, when they start talking venture cap, they're probably looking at American firms to invest, because that's where the expertise is. So, you know, how do you learn those things? You learn those things because you start talking to people and you start doing your research. And so I think that those are the things that you need to, you know, you've got to get yourself out there into the world, you know. And I think, you know, in person's coming back, and so there's kind of no better time to think about getting out there and starting to build your network.
I love how financing kind of like boils down to two ingredients: research and networking. Like, that's so cool when we, you know, peel back the layers. So I'm sure there are going to be questions. So if you have any questions, attendees, if you have any questions, please feel free to put them in the chat. We're going to jump into that really quickly to just end off our panel discussion for now. One last question, you know, for scaling companies, there perhaps, and to kind of preface, last week we talked about founder to CEO leadership evolution, how, you know, founders of scaling companies kind of need to let go and start delegating. And, you know, later on, a couple of weeks later, we'll be talking about building repeatable marketing and sales process. So there's this theme of, okay, you know, as a founder, we're in the operations, right? At some point, as we scale, we have to take a step back and take a look at the vision and the strategy. So for these entrepreneurs who are scaling, who are kind of balancing this, being there day to day while looking ahead a couple of years, Julie, you mentioned that, you know, funding it takes full-time focus. So there's this chicken and egg of needing funding to grow, but you can't really focus on the funding side because it pulls too much from the day-to-day operations. What advice do you have for somebody who's kind of, you know, in that mindset of just staying afloat with the day-to-day while still recognizing that they need to look ahead?
I always like to say, if you feel like you know what you're doing, something's coming down the pipe. So I think you have to get comfortable with being uncomfortable. And it's an endless process as an entrepreneur, because the more you grow your business, the more you feel like you don't know what you're doing. And the more responsibility you feel for making payroll every 2 weeks, the families that are depending on you, so many different pressures as the business grows than when you're just trying to actually make it survive, you know? And so I think it's a bit of a roller coaster. The highs are highs, the lows are lows. And you know, your network is your net worth in that, because you need to find people who not only can help you with the growth part, but who you can actually lean on and lay your, wow, guess what happened today? Like, for the good, for the bad, for the, I don't know what to do with this. You need to have those resources, because I think that the more you're an island, you think nobody else is going through what you're going through. And in reality, every entrepreneur is going through the same thing of some varying degree. And a lot of it is based around, I had a great idea. I saw a need in the market. I started this company, and what business do I actually have being here? There's a lot of that, right? And so you've got to just find ways to increase your confidence and to work on your leadership. And I just think that it's totally normal.
You kind of have to take it head on and get through it. And for those who might be watching the recording, I want to repeat this profound quote from Julie Ellis, of Chair of the Board of Directors at Angel One. Network is your net worth. So I think that's a very great way of summing things up. Shannon, do you have anything to say for scale-up entrepreneurs who are kind of in the thick of things?
Yeah, I mean, I think it continues to go back to, right, networking, surrounding yourself with people who are going to, help your business grow. You can't be an expert of all things, right? It's impossible. So you need to leverage those around you and just, again, see, like, knowledge is power. You just need to talk to as many people as you can and get in front of different groups and get introductions. Demand more of your network, I think, too, right? We all pay service fees, whether it's at your bank or things like that. You can ask them for an introduction to someone, and things like that. So yeah, those would kind of be my pieces of advice.
Yeah, never underestimate that. Hey, can I get a referral? That last question at the end of the conversation. I think that's so important. So, again, very, very great advice there, Shannon. Julia, anything to say for scaling entrepreneurs?
I agree with the network, net worth sentiment, and I think it's important that all of us really drive this home to wrap up today. But I think it's interesting that, all three of us on the panel today come from organizations that are prioritizing advisory or mentorship in some capacity. So we must be onto something here if all of us are talking about it. And so that would be like the takeaway. There are resources out there that want to support you, whether it's us or whether it's someone else, and they are available to have a conversation with you, to connect you to other people in their network. I talk to a lot of entrepreneurs who are not the right fit for Futurepreneur and they're not eligible for our programs, but that doesn't mean that I'm not going to take the time for a call and talk to you about who else I know who maybe can be of service to you in your next steps. And I think probably all four of us on this call today are very willing to do the exact same thing for you. So don't be scared to reach out. It could be a LinkedIn message. It can be like an inquiry or an email. Take that step, take that action. You never know where that's going to lead.
Amazing. Another profound piece of advice: take action, reach out. Amazing. So we do have a question in the chat here. With the older entrepreneurs, is there an age limit with regards to accessing programming and funding at your organizations?
I can start. So yes, with us, we do prioritize youth or youth-driven organizations. So that for us means 18 to 39. We can support organizations that are majority owned by young entrepreneurs. So this is actually really common, especially in tech, where we have maybe multiple co-founders, or we have some investors in the mix. We can look at a breakdown that is not completely 100% young entrepreneurs, but at least 51% young entrepreneurs. So that's something to keep in mind. Also really common if we're looking at a multi-generational business, like parents and their children looking at starting something together. As long as that younger generation is majority, we can move forward with an application. But yes, our program is exclusive to youth. We do offer really great workshops that are open to anyone. So our Rock My Business workshop series that is coming up in the next couple of weeks here, that's open to anyone. So feel free to still take advantage of our resources and our network and meet with us because we are available to you.
I'm very glad that the definition of youth goes up to 39. I wouldn't have considered myself youth, but hey, yeah, I'll admit to being young. So let's say somebody, and before I jump to you Shannon and Julie, Let's say somebody is 39 on the dot by the time they reach out to you, and by the end of the year they turn 40. Like, what happens? Do you kick them out?
No, so this happens a lot. I actually had 3 entrepreneurs turn 40 this week that I was working with pretty actively. So what we need to do is just be aware of those timelines. If you're 39 and you're going to be turning 40, what needs to happen is a credit check while you're 39. Everything else can happen while you're 40. We can disperse the funds out. You can work with your mentor. You can be a part of our network. All of that's fine. As long as a credit check takes place while you're 39, we're good to go.
Amazing. Julie, over to you. Any limits to age?
No age limits at all. It would just be, it comes down to the quality of the application and the thoroughness of the entrepreneur.
Now, I guess as a follow-up to that, do you see a trend in age of people coming to Angel One to raise funding?
It's all over the range. Yeah,
Mhm.
it's all over the range. I mean, it depends on what people have done before. Like we get, first-time entrepreneurs, serial entrepreneurs, people who've come out of, corporate or consulting jobs who are becoming entrepreneurs. So it's really a variety of people that we see.
So it's never too late or too early to start.
Exactly.
Shannon, how about you from BDC?
Yeah, I echo that. We see it all, and there's nothing, no age restrictions.
Amazing. So once again, attendees, feel free to submit your questions in the chat. I will be continuously reading them out. So question for everyone. Can you describe, perhaps finance hasn't really been the most equitable of industries. Can you describe, say, the effects of gender or race and how it plays a role in raising funds, from either loans, grants, or investment? And if there's anything in particular that your organizations are doing to contribute to greater societal equity through financing.
Certainly, underrepresented groups in venture capital investing and angel investing have been fairly widely written about at this point. Like tests like female versus male give the identical pitch word for word and receive quite different reactions, questions, and amounts of funding. We are making an effort we need to increase both our number of female investors and our number of female entrepreneurs. So we've been doing some work, like I hosted a first look event last spring with Haltech, one of our regional innovation partners, and we have featured 6 female founded companies in that event. So like really trying to put some focus on that, put some focus on multicultural founders and different, founders from different backgrounds and that sort of thing, because I think that both of those places have historically been underrepresented.
I can jump in here too. I mean, I guess I would just say as a whole, at BDC, like our purpose would be just to ensure that all entrepreneurs have access to, resources, financing, advice, networks, tools, everything that they sort of need to succeed. And we're obviously trying to provide equity for that access and that opportunity. And so, in partnership with different public and private sector players, we do look to obviously kind of fill some of those market gaps. And so, I mean, I guess we look to kind of, listen, learn, understand, and then we'll sort of take action. So, I mean, BDC as a whole, if you think about women entrepreneurs, we have a women in tech venture fund. We have an Indigenous loan program. We have a Black entrepreneur loan program that's sort of new. So we're ultimately, we're here to support anyone from any different background.
Yeah, I would say we're actually very similar at Futurepreneur. Diversity and inclusion is a core value for us, and we're always striving to offer more inclusive financing options. Absolutely. In terms of gender, we're actually pretty close to gender parity at Futurepreneur in terms of dispersed loans, which is really, really great to see. I think maybe part of that is we are industry agnostic. We don't exclusively focus on tech or in other industries that may be more male dominated. So that maybe helps balance it a little bit for us too. We have a side hustle program, which is fantastic. That's new within the last couple of years. And the side hustle program, we're seeing a lot of actually intake and uptake from women entrepreneurs as well. We're seeing a lot of women who are building businesses on the side of maybe a full-time income and looking to diversify maybe their household income in different ways. So we're finding that program is a really excellent fit for maybe folks who didn't see themselves in financing options before. And then we do actually have Indigenous and Black entrepreneur startup program options as well. And we have fully staffed teams with lived experience in both of those program categories, which is fantastic. So if you identify as Black or Indigenous, you can actually go through the entire Futurepreneur program working with a staff member who has lived experience. Most of them have been entrepreneurs themselves. They understand your journey. They know maybe the barriers that you're facing as an entrepreneur. And so we're actively trying to peel back those layers and address some of the barriers that have historically been facing entrepreneurs from underrepresented groups.
Yeah, amazing. And there's a follow-up question to that in the chat, about businesses that are owned by those who are from visible minority groups. And I think, the programs that you're running for Black entrepreneurs, Indigenous entrepreneurs, that really speaks to that. And also, it seems like from, my perspective that there is, as Julie mentioned, an emphasis on, multicultural founders and um, uh, and owners from underrepresented communities, perhaps outside of Black community and also Indigenous communities as well. Amazing. All right. So thank you so much for that response. I think it really speaks to um, the progress that we're making, especially in finance, because historically, it has not been a really equitable industry. So it's great to see, these changes being made so that people who have been disadvantaged, systemically and historically are getting a bit more of a getting a bit more on fair ground, essentially, and on equal ground. So I know that we have a lot more progress to make, so it's great to see that we're starting this way, and looking forward to seeing how in the next couple of years how things grow, and with the effects of these programs and how we're supporting equity and societal equity in our communities. We have another question from the chat here. What kind of flexible terms are available if a loan is granted from each organization? If there are flexible terms, how does someone qualify, say like an option of 12 to 18-month postponement of principal payments at the start of the loan? What kind of flexibilities exist in the terms?
I can go first on this one. I mean, with BDC, yeah, our loans are really flexible. We typically will always offer that interest-only period of about 12 months is typically what we will offer. Sometimes we can even go a little bit longer on that side of things. And we also have,
sorry, go ahead.
I say there is, like, in terms of digital adoption and just technology and things like that, we definitely have some unique programs that are out there that might have, preferential interest rates or terms sort of associated to them. It could be a loan for expansion purposes. You're entering a new market, adding a new product or service, where we could just give you a longer, maybe amortization. The loan could be fully open that you could repay at any point in time. You could re-advance on the loan within, you know, a year or two and things like that. So yeah, we've got lots of different products and solutions.
Awesome. I would just say we're pretty similar at Futurepreneur. Our program's actually partnered with BDC on traditional startup. So a lot of you know, our terms are driven and come from our partnered relationship with them. So we do on all of our programs across the board, whether it's Black entrepreneur startup, traditional startup, Indigenous startup, side hustle, all those programs offer interest only in year one. So we do try to have that consistency no matter what program you're looking at. If you're looking at Futurepreneur only funds from us, all of our funding from Futurepreneur is also open. So you can pay off the loan with that flexibility early. And we do try to accommodate those requests as much as possible as well. So we do work with the entrepreneur as much as possible to, you know, build in that flexibility and make sure you're aware of the loan terms as clear as possible up front.
So you pay back your angel investors when you sell your company. That's basically the way the angels get their money out, or by doing a big round that takes out the angels, which I mentioned earlier. Sometimes when you get into Series A, B, and C, they take out the angels, the early investors at that time. If you have a convertible, one of the ways that angels can invest is a debt instrument called a convertible note, where it pays you interest typically for about 3 years, and then it has a right to convert to shares at the end of that period. So, you know, potentially you could pay the note out during that 3-year period. It's highly unusual. Angels get their money back when founders exit. That's really the most common way.
That's awesome. And we're going to do a bit more of an investment deep dive in one of our later sessions. But Julie, I'm curious, you know, on this note of flexible terms, what are some like unknown terms from angels that perhaps people might not anticipate that, you know, you think would be good to kind of just mention today?
So deciding on valuation, agreeing on valuation. Entrepreneur always wants more, angels always want less, the typical negotiation. I would also say sort of the composition of the board and what kind of representation the investor group gets on the board. That representation is not necessarily reflective of the number of shares that are owned. So it depends on timing of how, you know, for example, the investors own 20% of the company, but they represent 40% of the board seats or something along those lines. And that's where it really depends on what you agree to. Going back to the league, you know, make a good legal agreement, get good legal advice. Both sides need to have a lawyer. But those would be some of the things that I see that come up in conversation.
And those wouldn't typically be things that, say, Futurepreneur or BDC would really talk about with the clients, eh? Mm-hmm.
No.
So are there like lesser known terms that, you know, perhaps entrepreneurs might be, it might be good for them to be mindful of, you know, while they're having conversations with you? Julia and Shannon?
I would say no, it's pretty straightforward. So I can tell you our traditional startup loan terms because I think we probably have less variability than BDC. So our startup term loan is a 5-year term, year one interest only. You're looking at a prime plus 3.75 interest rate and an open term loan. So you can pay it off early. That's pretty much it for all of our startup programs. You know, no matter what group you're applying under. Our side hustle loan term is just a 4-year term. That's the major difference. It's only Futurepreneur funds. It doesn't come from BDC. So I would say that's sometimes of interest to entrepreneurs is where the money is coming from with us, because it is a partner program with BDC for startup. You know, there is maybe some additional paperwork that you fill out, but we do actually process the loan and streamline that process all in-house. So You'll fill out a form for the BDC, but you don't have to, connect with a BDC account manager separately. We actually just process the BDC funds in-house at Futurepreneur as well.
Yeah, on our side, it's a pretty streamlined process too. Obviously, depending on the amount of financing that you're looking for, and I would just say how flexible and patient the capital is. Like typically for that patience and that flexibility, you might pay a higher rate just for standard, 12 months of interest only, and then you start, repaying the loan back. You'd maybe see, lower interest rates with that type of a solution versus having those longer interest only periods or a balloon repayment at the end. Ultimately, though, we're working, and this is again goes back to that financial forecast and why that's so important, right? We're really looking at that to see, because we want to match sort of what the future growth looks like, right? So we want to make sure and we match our payments to your cash flow, essentially, right? So we want you to be able to conserve capital when you want to or need to continue to invest that to grow, right? So yeah, and I mean pretty standard, like I mentioned earlier with most of our loans, like, earlier stage, we are typically looking at kind of having that personal guarantee. But outside of that, there's not a lot of other, bank covenants or restrictions and things like that for the money.
Amazing. So thank you for that. We have a bit less than 2 minutes left. So just a quick recap. We have gone through some details about working with each of your organizations, and we have some great advice for entrepreneurs who are scaling their companies, which includes do your research, network is your net worth, and take action when in doubt, reach out and have a conversation. So is there anything else that you want to add? Any final closing words before we say goodbye for today?
I would just say investigate all your options, be thorough. Different things work for different people, and knowing that and investigating how to grow your business and how to finance it is really important.
Yeah, I would just say too, yeah, to echo Julie's comments, all of the above, and just, feel free to reach out, right? I know Julia mentioned it earlier too, right? Happy to have a conversation with anyone. So whether you're a fit today or you aren't, I could at least be able to kind of connect you to somebody that, could help you today, or at least be able to give some type of a value add to you. And again, it's just about knowing what is out there, and what advantages, disadvantages, what would work today versus what will work when you're at that next stage in your business. We can work through that together and have those conversations.
Yeah, agreed. Echo that. The research so key, but the take action. So if you're taking anything away from today, it's this action of reaching out to us and having a conversation with us is going to help build that network, right? It's going to help you research your options. All three of those pillars are connected. So I look forward to having a conversation with you. I hope that I can support you in your next steps on your journey, whether it's at Futurepreneur or somewhere else in the really fantastic ecosystem that exists in Mississauga. So thank you for your time today, and best of luck in your next steps.
Amazing. Thank you all so much. Thank you, Julie. Thank you, Julia. Thank you, Shannon, for being here today. What a wonderful session. We are right on time. Thank you, everybody who is here as an attendee. Next week, we have a session coming up on Tuesday on advisory boards. So looking forward to seeing all of you there as well. With that said, thank you again for being here, and enjoy the rest of your day. Bye now.
Thank you.